Well, good morning. Bill Tucker from Maynard Costerisan. I'm here today to talk to you about governmental accounting basics. Just a quick introduction about myself. Been in governmental accounting auditing now for 20 years. Just like hopefully many of you today with our newly elected officials, started off, in governmental accounting 20 years ago, coming out of Michigan State, and had one credit coming into that I learned about governments and what makes them different for their accounting. So obviously, a lot of years of experience, work with many different types of governments. We work with cities, villages, transit authorities, road commissions, all different type of governments across the state of Michigan, and appreciate to have you here today. Along with me, I have Aaron Stevens. So Aaron's going to do a quick introduction himself.
All right. Good morning. I'm Aaron Stevens. I've been in this arena, this industry with governmental accounting and auditing for about 27 years, so a little bit longer than Bill. Bill and I serve on the governmental niche committee for the firm, and we thought this would be a good idea to introduce newly elected officials to the basics of governmental accounting.
All right. So our main emphasis today is really looking at those newly elected officials. So hopefully, a lot of you are on the call today. So there's newly elected officials. Some people that might be getting into this would be new clerks or treasurers. So they obviously have a lot of additional responsibilities for their communities. The day-to-day operations for some of those townships. Obviously, if you're a treasurer at a county, a lot of different responsibilities out there for each of you. In addition to that, your board members or council members that have joined as well. So one thing that we really want to walk through today is kind of looking at the governmental accounting and the financial statements and really kind of understanding that, but really kind of what makes you different, and trying to get that information to you. So at Maynard Costerisan, we do have a lot of resources going into governmental accounting. We audit greater than 200 governments, including school districts and many different types of primary governments and special governments as well. Across the state of Michigan. So all of our governments that we are auditing are within the state of Michigan. We also do have many experts in the software packages that you probably are using today. So, if you're using BS&A, QuickBooks, or any other platform, we do have people that have worked for those companies, are experts in those areas. So anything that you really need, just gaining an understanding of some of that software, we do have people that can definitely help you out. In addition, we have a good departments for our contracted accounting and outsourced solutions. So that's definitely an area that we want to talk about and focus on with you. Anything that you're having issues with, concerns about, we do have a team of that group that could definitely come out and help you out with understanding bank reconciliations, again, understanding that software, getting you prepared for your audit, looking at your internal controls and figuring out if there's whole new group there, or new clerk and treasurer, what does that internal control structure look like for your municipality, and making sure that's the best situated internal controls for your organization. Also, we have experts here at the firm, related to payroll. So if there's a payroll question that comes up, really anything, that you have issues with, definitely feel free to reach out to us. We're here to help you. So if there's, even if it's something that we currently don't do as a firm, we know people in other areas. So if you're looking for a new actuary, we have a lot of actuaries that we work with on pension and OPEB actuarial evaluations, that we can provide some names to who you might be want to work with. So again, definitely reach out. And that's what we're here for. If you're a current client, feel free to reach out, and we can get into more details on your financial statements or whatever that is. So like I said, be in touch, please. Just a general overview again for that governmental accounting basics, as we kind of talk about today, and as you're getting used to looking at your financial statements, the one thing you're really going to notice first off is really the differences between governments and maybe other financial statements that you've seen. So if it's a not-for-profit organization that you're on board of, or you've looked at for-profit financial statements before, you'll notice some pretty significant differences. And one of the main differences that you'll first see is the different sets of financial statements. And what I mean by that is the balance sheets and the income statements. So on a nonprofit or for-profit, you're seeing one set of financial statements for those. So the balance sheet, income statement, cash flow statement. As you're looking at the government financial statements, probably the first thing you'll notice is the amount of different financial statements or balance sheets and income statements that you see. So, and what that is all those different funds that the government has. So, and that's a lot of what we'll be talking about today is those governmental funds, the proprietary funds, the fiduciary funds, or another way to talk about it is, like your general fund, your special revenue funds, maybe your major and local streets. So you'll see all those different funds, and each one has their own set of financial statements. So that's probably one of the biggest differences. Another thing, three kind of keywords that I would kind of talk about, and really what makes governments different is accountability, transparency, and interperiod equity. And those are three probably of the biggest words in governments financial statements compared to other organizations. So that's, again, something that makes governments different, unique, and great at the same time. Last couple things before I move on to the next slide. There are a lot of great resources out there. I know Aaron's going to be sharing some of those later on during the presentation, but some of those resources as a newly elected official that you should first go out to would be the Michigan Department of Treasury. We do have links to that later on in the presentation, but again, that's something that I would recommend going out and looking at. The Uniform Chart of Accounts, the budget manual, the accounting manual. I mean, there's just 5 or 6 really good ones that Department of Treasury has out there, and that they're working on updating as well. So some of those are relatively old, and then some have been updated here just in the last year or so. And as I mentioned before, any assistance that you are looking for or need, definitely reach out. If that's bank reconciliations, understanding your software, internal controls, audit prep, ask for assistance, and earlier the better, I guess, in a lot of situations too. So, if you're having trouble with your bank reconciliations or just understanding, how everything flows and works, maybe in your software, definitely reach out early, and we can walk through those, and then hopefully, have a successful term as you go through your process. All right. There we go. Moving on to the next slide. Talking about the financial reporting entity. So, as you look at your financial reporting entity, you have your primary government, which again is the governmental funds, enterprise funds, and then you have your component units, which are kind of broken down between discretely presented and blended component units. So as you look at your financial reporting entity, that's really the funds that every government uses, as a combination of all those funds is that reporting entity. So again, each of those has their own balance sheet and income statements, and it's really a combination of all those, the general funds, the special revenue funds, enterprise funds, that makes up that financial reporting entity as an organization. So those three different components that make up your financial reporting entity is that primary government, organizations for which the primary government is financially accountable, and other organizations for which omission would be, misleading. So organizations for which the primary government is financially accountable, that could be such things as, again, those are really looking at like typically those component units. So that could be such things as like your DDA, your Downtown Development Authority, or an organization like a housing commission. So, as you look at those, you're really looking at, the makeup of the board, who appoints the board and the makeup of those board to say, are we really financially accountable for these organizations? And then what is our say in the operations of those organizations as well? So just kind of that bringing in everything under the hats of those of the primary government to say, yes, we have our main funds, but we're also responsible for, in some ways, for these other organizations as well. So as we look at the primary government, those can be, again, such things as, a county, cities, townships, villages, all are considered to be primary governments. But we also do have special purpose governments that meet all of the criteria below. You can be a separately elected governing body, has to be legally separate, and fiscally independent of other state and local governments. So as you look at those, special purpose governments, those things can be such things as, maybe a school district, a transportation authority, a utility authority, all kind of would be in that classification of that special purpose government, and a lot of the same reporting, but just a different makeup compared to that primary government. So as we get into, as I mentioned before, really the big makeup and differences of a government is the funds that they do have, and what makes up that as the primary government. So a fund is a fiscal and accounting entity with self-balancing set of accounts that government establishes for accounting purposes in accordance with laws, regulations, restrictions, and specific purposes. So as I think about this, or for you to think about it, really think about like your special revenue funds. And you kind of look at that definition or talk about that definition. Think about those special revenue funds. Say you have a special levy for, special tax levy for police services, and that kind of fits into that definition of saying, there are restrictions and regulations and laws out there, and we've collected those additional funds for that specific purpose. So we're having a separate set of accounts or fund for that specific levy. So that's definitely one way to think about it, and one reason that you would have a separate fund. The fund application, there are no specific number of funds that government should use. A government should establish and maintain funds required by law, and for sound financial administration that only the minimum number of funds consistent with legal and operating requirements should be established. So, a majority of governmental activities can be handled specifically by just the general fund. We do have some, smaller governments that have just a general fund. That's maybe their only fund. But, there might be, for, a requirement of state law or best practice that you might set up additional funds. So some of those additional funds might come in the form of, again, that additional tax levy that you have. So we need to set up a separate special revenue fund to account for that tax levy. We also might, get bond proceeds, and there might be a requirement within those bond proceeds to set up a separate fund for that. So you might have a debt service fund to make those payments for those bonds. And also you might have a capital project fund to, you're constructing a new city hall, and you have a separate fund to account for that capital project. Again, in some cases, some of that can all be handled within the general fund. But as a best practice, you might see where a separate fund would be valuable and or required to set up that separate fund. So we did talk a little bit about those component units earlier. So we have a couple different potential different component units. We could have discretely presented component units or blended component units. So a blended component unit is a legally separate entity for which the primary government is either financially accountable or the mission of that component unit may be potentially misleading based on the nature and significance of that relationship. So again, that's part of the evaluation. A lot of component units, if there are some, probably already handled within your financial statements. And then I guess if there's a new entity that's developed, that would need to be looked at to determine if it is part of the organization. And again, I mentioned this already, but the presentation of those component units would be broken down in the financial statements between that discretely presented and the blended component units. From there, we're going to turn it over to Aaron. He's going to go through the governmental fund financial statements.
All right, thanks, Bill. So Bill introduced the concept of fund accounting and the fund being a self-balancing set of accounts. So funds are broken down into three broad categories, and you see them on the slide here: governmental, proprietary, and fiduciary. And then within each of those broad categories, we have fund types. And they are all listed there on the slide. And I'm going to, as Bill said, cover the governmental funds and those fund types that you see: the general, special revenue, capital projects, debt service, and permanent funds. Governmental funds are used to account for activities primarily supported by taxes, property taxes, grants, or similar types of revenue sources. Governmental funds financial statements are presented on the modified accrual basis of accounting, which means they primarily have a current financial resources focus. All governmental funds can be classified into one of the five types that I mentioned earlier. So the general fund, special revenue, debt service, capital project, and permanent funds. As a best practice, budgets should be prepared for all funds. In the state of Michigan, budgets are required to be prepared for your general and special revenue funds. Other governmental, I already touched on other governmental fund types that you see there. You can have budgets. It is a best practice, but they're not technically required by the state to have the budgets for debt service, capital projects, or permanent funds. The general fund is the primary operating fund for any municipality. The government should operate with as few funds as possible, as Bill had mentioned. All financial activity that isn't required to be reported and accounted for in another fund would by default go to the general fund. So because the general fund is used to account for and report all of those financial resources that aren't reported elsewhere, you will only have one general fund in any municipality. Special revenue funds account for revenue sources or revenue streams that are restricted by external sources for specified purposes. So a restriction cannot come from within the government itself. These restrictions will come from outside organizations. In the cases of for example, a grant, if someone gives you a grant to the city, the township, what have you, and says that money has to be spent on parks, you could set up a special revenue fund to account for that parks grant. Other examples, and they're included here on the slide as well, major and local streets have gas and weight taxes that support those activities, and those are required to be in a special revenue fund by the state of Michigan. School districts will have food service funds, and they receive state and federal funding restricted to providing meals for the students. That's just an example of what might fall into a special revenue fund. Capital project funds. Governments tend to distinguish their operating activities from their capital activities, just as they tend to distinguish the operating budgets from their capital budgets. So capital project funds are are established to account for the financial resources that are restricted, committed, or assigned to expenditures of capital outlay. Leaving the capital activity reporting within the operating activity in the same fund as the operating activity would tend to distort any historical trend data that you want to look at or measure, which would affect your budgets and any future planning. So sometimes it's a good idea to pull out those large capital projects and put them into a separate fund away from the general fund activity. Sometimes, and Bill touched on this as well, sometimes it's required. Sometimes if you have issued debt, you have a bond resolution. That bond resolution may require you to establish a separate capital projects fund to account for the building of that new city hall. But it doesn't have to be required. It's permitted to establish a capital projects fund if you want to account for it separately, even if you don't issue debt to do the project. And governments frequently accumulate resources in anticipation of debt service payments, either to fulfill legal or contractual obligations, such as revenue supported debt if you have revenue bonds, or voluntary. If you have general obligation bonds and you choose to set up a debt service fund, you can do that as well. Again, the bond resolutions, if you did issue debt, they may require you to have a special, or not a special, a debt service fund separate from the general fund activity. All right, and then permanent funds account for and report resources that are restricted to the extent that only the earnings may be used for a specified purpose. In other words, you can only spend the interest. So if you have, an example might be a perpetual care fund for a cemetery, and a portion or all of the lot sales gets accounted for in the permanent fund, and you can't spend that corpus, or that principal, but you can spend the earnings that are generated from those lot sales that are set aside in that permanent fund. All right, now I'll turn it back over to Bill.
All right, well, thank you, Aaron. So next fund financial statements that we're going to be covering is the proprietary fund financial statements. So the proprietary fund financial statements are broken down between your enterprise and your internal service funds, and these are presented on the full accrual basis of accounting. So different from where your governmental funds are presented on that modified accrual, this is the full accrual basis of accounting. So you know, the differences that we're going to be seeing in these financial statements is that, you know, on the balance sheet, you would be reporting you know, all of your capital assets, your long-term debts, your net pension or OPEB liabilities, anything that's longer term is going to be reported on these financial statements, and it's going to be, you know, similar to what you would see in a nonprofit or for-profit organization. So proprietary funds, they may operate similar to a business. Their main objective is to recover the costs through charges. And as mentioned, you know, the basis of accounting is that full accrual basis of accounting. So they don't have that same, you know, short-term focus that you're going to be seeing in your government funds. They do have that long-term focus, looking at, you know, if it's a utility fund, you know, again, recording those capital assets, but also, you know, reporting, you know, the depreciation on those capital assets and making sure that the user charges are sufficient enough to, you know, not only cover the current year costs, but to, you know, have, you know, enough equity for future years as well. So some of the main, you know, enterprise funds that we'll be seeing within the financial statements would be, you know, things such as your water, sewer, or electric utilities. Maybe a transportation authority also is reported as an enterprise fund. So, you know, enterprise funds are permitted or required for any activity for which a fee is charged to external users for goods or services. And again, so you can see that, you know, like I said, with those water, electric, sewer utilities, you know, they're collecting that fee for those services or that they're providing. The other type of proprietary fund that we'll see in the financial statements is internal service funds. So internal service funds are permitted for any activity that provides for goods and services on a cost reimbursement basis to other funds, departments, or agencies of the primary government and its component units or other governments. So examples that you'll see for internal service funds are self-insurance pools, and self-insurance, and then motor pools as well. And probably motor pools is probably one of the main examples that we see within financial statements where, as a government, they're purchasing a piece of equipment, and then they're charging that out to those different funds or departments within the primary government, and all paying into that motor pool. The next set of financial statements that you'll see is the fiduciary fund financial statements. There's 4 main types of fiduciary fund statements that you'll see: your pension and OPEB trust, your private purpose trust, your investment trust, and then your custodial funds. So for a lot of people, if you're not newly elected and you're on the call, you might see a little bit of difference there in just terminology, going from your typical agency fund to that custodial fund. That was new just this last year, so just a little bit change in terminology in that type of fund. Again, these are presented on the accrual basis of accounting, similar to what you would see in your proprietary funds. As you look at these statements, again, we'll get into a little bit, but you would see, instead of revenues and expenses, we'll see additions and deductions in the income statement for these, and we'll talk about that in the next couple of slides as well. So the fiduciary funds are holding resources. The resources are held in a trust or a custodial capacity. So as you can see there, the main makeup of 3 of those funds is that they do need to be held in a trust. So if you're looking at your pension or your OPEB assets and they're being set aside in the trust, that is an irrevocable trust. So those assets are set aside for that purpose, and that is the main makeup of those funds. Other types of funds that you'll see as fiduciary funds, could be, again, your fund 701, used to be called probably your agency fund, but again, that's probably going to be changed over to your custodial fund in the current year. Other types of funds that you might see would be like a current tax collection fund. Is also considered to be a custodial fund, and that would be fund 703 by the Uniform Chart of Accounts. And then the last one that we see a lot of is those pension and OPEB trust funds. So as you get into the presentation of the financial statements, there are a couple different ways that the financial statements are presented. So there's as we kind of go in and looking at financial statements, or you hear presentations about your financial statements, there's what we consider to be major and non-major funds within the financial statements. So the first category is your major funds. So the general fund is always considered to be major. So that is the main operating fund of the government. And the other funds go through a criteria to determine if they're considered to be major funds as well. So really, this is the presentation of these funds within the financial statements. So the criteria that those other funds have to go through is that we're looking at multiple components of those other funds to determine if they're major. So we're looking at their assets, their liabilities, their revenues, and their expenditures. And if any of those 4 make up 10% of the fund type and 5% of the combined governmental and enterprise funds, they're considered to be major funds in the current year. And I guess really the important part of something be considered to be major, and the reason that it's shown differently in the financial statements is really the intent is to show the significance of the activity in that current year. So if you had a large capital project in one year, that one is separated out and shown as a major fund, and gives the users of the financial statements information related to that one specific fund, and they can see the activity that happened in something that was significant to the government in the current year. Now, those can change, obviously, based on those calculations that we talked about. Those major funds can change between year to year to year. So in one year, you might see a major street fund, a special revenue fund be major, and the next year it might be a debt service, and the following year might be a capital project. Again, it's all based on those calculations that we're going through to determine those major funds and how those are presented in the financial statements. The only other major funds outside of the general fund and that calculation, any fund that management believes is important to users could also be considered a major and presented separately in the financial statements. Haven't had that happen a lot that I've seen, but again, sometimes there's just certain things or activities in a government that just are really significant. They've had a lot of questions, whatever it is. They really want to separate those out and present those as major. And then the other funds that would be presented, so a combination of all of your other funds that aren't major funds get categorized into what we consider to be non-major funds. And within your financial statement presentation, those are presented in a single column presentation in the basic financial statements. Here in the state of Michigan, we actually do report those as in other supplementary information and show those funds separated out in the back. So they give a little bit more detail on those non-major funds. And that isn't consistent across all states, but in Michigan, we do show that's separated. So the basic financial statements just are combined, if you're looking at your financial statements, and a set of basic financial statements is a combination of your government-wide financial statements, your conversion from your fund-based financial statements to your government-wide financial statements, your fund financial statements, which would be, again, those major funds, and then combinations of the non-major funds, the combined schedules, your notes, and your required supplementary information. The minimum presentation to be shown in the financial statements is a makeup of the required supplementary information and the basic financial statements. So a lot of the financial statement presentations that you'll see first start off with the management discussion and analysis. The next section that it gets into is your government-wide financial statements and your reconciliations from your fund level financial statements to your government-wides, your fund financial statements, and your notes to the financial statements are all considered to be part of that minimum presentation, and then any required supplementary information other than your MD&A. So again, your budgetary comparison schedules for your general fund would be considered to be required supplementary information. Also, any major special revenue funds would also consider to be required supplementary information that would be presented in the financial statements. And again, this same slide, I've gone over a lot of that already, so I am going to turn it back over to Aaron, who's going to jump to the next section, which is your government-wide financial statements.
All right, thanks, Bill. So government-wide financial statements, as Bill mentioned, they're prepared on the full accrual basis of accounting, and they have an economic resources focus, so it is different than the governmental fund presentation that is done on the modified accrual basis of accounting. So a different perspective than you see at the governmental fund level. And the way these financial statements are set up, your government-wide financial statements are broken into activities. So you have governmental activities, business type activities, and then the discrete presented component units are shown in separate columns. And I've got a slide or two sample financial statements so I can actually show you what that looks like. For the fund level financial statements, these follow the government-wide financial statements, and again, they're broken down into the broad categories of governmental funds, proprietary funds, and fiduciary funds. And then within those broad categories, we do have that major fund presentation that Bill talked about. So you'll have major governmental funds, and then all of the non-major governmental funds will be grouped together and shown in the aggregate. For proprietary funds, again, you may or may not have a major proprietary fund, major enterprise fund, I should say, and then aggregate the non-major enterprise funds. Internal service funds, because they are internal to the government, even though they're proprietary fund, they're shown off to the right side of the financial statement in their own column. And internal service funds, most of the time, will be categorized as governmental activities in the government-wide financial statements. Sometimes they will be allocated between governmental activities and business type activities, but most of the time they'll be grouped in with the governmental activities on the government-wide financial statements. And then the fiduciary funds are shown after the proprietary funds, and again, those four types being the pension and OPEB trust, investment trust fund, private purpose trust fund, and the custodial funds such as your property tax collections fund. And we'll cover some of the differences in the basis of accounting here. Basis of accounting, again, the modified accrual basis is more narrowly focused on assets and liabilities that are relevant to the near-term liquidity of the government. So this a current financial resources focus. So when we get to an example of the balance sheet will not have any long-term items on there like capital assets or long-term debt, net pension liability, and so forth. This is just the near-term financial assets and liabilities of the government. Proprietary funds, again, an enterprise and internal service funds are prepared on the full accrual basis of accounting, just as the government-wide financial statements are. And so this is the economic resources focus, and it includes all assets, liabilities, and net position, not just that current financial resources focus. To reinforce the concept and the differences between modified accrual basis of accounting and the full accrual basis of accounting, governmental funds recognize revenues when they are measurable and available. So generally available is defined as within 60 days of fiscal year end. Again, that's somewhat unique, I think, to Michigan, or maybe not consistent with the other states. Other states have defined available as being longer, maybe even up to a year after their fiscal year ends. Proprietary funds recognize revenue when it is earned and measurable, and not necessarily available. So even though you don't have the cash, you might still record the revenue. Deferred inflows and outflows are elements of the financial statements. Deferred inflows is an inflow of resources, but it relates to a future period. For example, property tax is levied in the current year to finance the next year's budget. So if you have a December 1 levy and you have a calendar fiscal year, you would, if you started collecting that December 1st levy in December, you would have a deferred inflow of resources because that tax levy is generated to finance the next year's operations. And it is different. A deferred inflow is different than a liability, but along the same lines, but it is a different definition. A deferred outflow, not to be confused with an asset, meets the definition of an outflow of resources, but again relates to a future period. And so here an example might be a deferred loss on a bond refunding, where typically that deferred loss is amortized over the life of the bond. So you don't recognize all of that expense in one period. You've got a deferred outflow. Pensions will have deferred inflows and outflows, typically, not always, but could have deferred inflows and outflows that are recognized on the full accrual financial statements as well. And those are recorded in an effort to smooth out the significant actuarial variances from year to year related to experience, investment earnings, changes in assumptions, and so forth. Also, contributions made subsequent to the measurement date for that actuarial valuation might result in a deferred outflow. Governmental fund financial statements. There are two governmental fund financial statements, the balance sheet and the statement of revenues, expenditures, and changes in fund balances. So the balance sheet and the income statement in the business world. Because the governmental activities on the government-wide financial statements are prepared on a different basis of accounting, there are these reconciliations that are included in your financial report that detail out those differences. Those long-term items, such as the capital assets, the long-term debt, the net pension liabilities. Those are detailed out on the reconciliations and are included in the financial statements. All right, this is a repeat slide, really, just to give you a visual perspective of the fund financial statements and how those are set up. Again, governmental funds will be reported first, proprietary funds follow that, and then fiduciary funds after the proprietary funds, but before the notes. Because the governmental funds have a current financial resources focus, as I said, you won't see those long-term items on the balance sheet. I went through that already. The capital assets, long-term debt, compensated absences is another example, net pension liability or net OPEB or other post-employment benefits liability such as retiree health care. None of that is reported on the balance sheet. Those are all long-term items, and the balance sheet has a current measurement or current financial resources focus. So fund balance represents the equity in each of the funds, and fund balance is reported into 5 potential classifications as you see on the screen there: non-spendable, restricted, committed, assigned, and unassigned. And as I said, we do have a couple of slides just to show you an example of what these financial statements look like. This obviously does not include the entire balance sheet because fund balance gets cut off at the bottom. But the general fund, as Bill mentioned, is always a major fund. So that's reported separately in its own column. In this case, the major streets fund is a major fund using that 10% and 5% calculation. Special assessment fund is also a major fund in this case. And then the non-major governmental funds are aggregated and shown in that fourth column over. And then the total governmental funds column is the column that is used to reconcile back to the government-wide financial statements and the statement of net position. So we reconcile the balance sheet to the statement of net position, detailing those differences in the basis of accounting. The statement of revenues, expenditures, and changes in fund balances. Again, the operating statement, and this is detailed by current expenditures and distinguished from debt service and capital outlay. So they show the expenditures by function as being current, debt service, capital outlay, and then the other financing sources and uses are shown below the expenditures, kind of below the line, if you will, and include transfers in and out, bond proceeds, premiums or discounts on bond issuances, capital leases is another other financing source. And again, an example of what that might look like here. Same major fund presentation. So you have the general fund, the major streets fund, special assessments fund. Those are all major funds, non-major funds aggregated, and then the total on the right. And then that changes in fund balance in the total column is reconciled to the change in net position on the government-wide statements, the statement of activities. So here you can see the detail on the expenditure side. The current expenditures by function include general government, public safety, public works, community and economic development, and recreation and culture. Those are shown separately or distinguished from capital outlay expenditures and debt service. And then as this page also gets cut off too, at the bottom there you can see the other financing sources and uses title. That is where your transfers in and out between funds would be reported, as well as any bond issuances and so forth. All right, and Bill will go over the proprietary funds.
All right, the proprietary funds are broken into 3 basic financial statements. We have our statement of net position, or the balance sheet, statement of revenues, expenses, and changes in net position, and then the statement of cash flows. As we mentioned already, typical ones that you'll see using the proprietary fund financial statements are going to be, things such as like your transportation authorities, your utility funds are going to be presented in this method. Similar to your governmental funds, we are going to do have a breakdown between each major enterprise fund based on the calculations, the 10% and 5% calculations. And then there is going to be a combination, the aggregate non-major enterprise funds would be combined as well into one separate column there for you. The enterprise funds or the internal service funds, as mentioned before, would be separated off into their own separate column. And the reason for that is because those are considered to be, governmental activities. So as we reconcile that and combine it with your governmental funds, that would be combined with those as we move to the government-wide financial statements. Again, those are going to be separated on the financial statements and could be combined if there's more than one internal service fund. As we look at the statement of net position, that is going to be presented as all of your assets and your liabilities. So as mentioned before, they include all of your capital assets, long-term debt on the full accrual basis of accounting. On the statement of net position, we're actually only going to have 3 categories for your net position, and that would be based on accessibility. So, you would have your net investment in capital assets. That would be a combination of your capital assets and any long-term debt that is associated with those capital assets. Any restrictions to your net position, and then your unrestricted net position as well. Broken, like I said, all 3 of those would be the components of your net position. For this one as well, we do have a couple examples for you. So this one is your statement of net position. I can see in this example, we do have your water and sewer fund. It was a major fund and was the only business type activity. In this example as well, we do have that far right column, which is your government activities, and your motor vehicle pool as your only internal service fund. The other things that you would see on this statement that are a little bit different than what Aaron presented for your governmental funds is those non-current assets, your capital assets, and your non-current liabilities, your long-term debt, net pension liability, net OPEB liability, all would be included in this statement of net position. The statement of revenues, expenses, and changes in net position is broken down between a couple different categories. So it is broken down between your operating revenues and expenses. Those are separated from your non-operating items. There also would be separate categories for your capital contributions and your transfers as well. We can see this in this example here. Again, we didn't present the whole entire thing, but you do see those kind of different breakdowns between your operating revenues and expenses at the top of the page, coming down to that operating income for that water and sewer fund, and then any of your non-operating revenues and expenses kind of below the line, I guess you would say, compared to your operating income. And then the last statement that we would have for your proprietary funds would be your statement of cash flows. The statement of cash flows is broken up into 4 different categories. That is broken up between your operating activities, your non-capital financing activities, your capital related financing activities, and your investing activities. And then the last statements that you would see within your fund financial statements would be your fiduciary funds. So the fiduciary funds would be and have separate columns if all these were applicable for your pension and OPEB trust funds, your investment trust fund, your private purpose trust fund, and then your custodial fund would all be separate, 4 separate columns within your fund financial statements. On the fiduciary fund statements, there are only 2 basic financial statements, your statement of net position and your statement of changes in your net position. A little bit of different terminology in your statement of changes in net position. You would have, instead of revenues and expenses, you would have additions and deductions in your net position that would be presented. All right, I'm going to turn it back over to Aaron to wrap things up.
Okay, so after we have prepared the fund financial statements and we've identified those reconciling items, we roll all that up to the government-wide financial statements. And there are two government-wide financial statements: the statement of net position and the statement of activities. Again, back to the basic. If this were the business world, this would be your balance sheet and your income statement. So the statement of net position is as of a specific point in time, the end of your fiscal year, while the statement of activities is the operating statement and covers the 12-month period that ends with your fiscal year end. So the statement of net position, again, shows separate columns for the governmental activities, business type activities, and the discretely presented component units, all of which are prepared on the full accrual basis of accounting for the government-wide financial statements. Net position, broken down into those three categories. Again, and Bill touched on this, the net investment in capital assets, net of related any debt, restricted amounts, and then unrestricted net position. And here is an example of what that looks like: governmental activities, business type activities, and the component unit columns off to the right. The way that I look at this is, if you take all of your governmental funds, you roll in the internal service funds, and then you adjust those numbers for those long-term items like capital assets, long-term debt, net pension liability. That is what is reported in your governmental activities column. The business type activities column would include all of your enterprise funds, and because enterprise funds are prepared on the full accrual basis of accounting, as are the government-wide financial statements, it's the same information that you see in the enterprise funds, but it's less detail, a different format. It's a higher level of reporting, going for that government-wide look, if you will. And you can see here on the statement of net position, you've got the assets, current and non-current, deferred outflows of resources, and the examples we talked about there. The liabilities, current and non-current. Then you would have deferred inflows of resources and the resulting net position. So when all of those are netted out, you have net position that is broken down into those three categories. The statement of activities. This statement, again, full accrual financial statement, the operating statement for the government. I always say that this is a little backwards because we start with expenses in the left-hand column, and those expenses are detailed by function. And then we read the statement left to right, and you add back in your program revenues to come up to a net expense or net revenue in the right-hand side of the page. And then as you read down the page, you add in your general revenues. And I know that's a lot to visualize, so I actually have an example here as well. Again, we start with the expenses on the left-hand side, broken down by function: general government, public safety, public works, the same format that you would see for the governmental fund financial statements, those same functions, but on the full accrual basis of accounting. And then you would add in those program revenues left to right. You have charges for services, operating grants, and capital grants. And then that right-hand side of the page, and it is cut off, but the right-hand side of the page shows that net expense or net revenue by function. And so for governmental activities, most of the time you'll see a net expense. And that is because governmental activities rely on general revenues to function. So general revenues would include things like property taxes, your state shared revenue, interest earnings, et cetera. Following the governmental activities, if again on the left-hand side of the page, below the governmental activities, you have business type activities. In this case, it's water and sewer. So that's the enterprise fund that we saw earlier. Again, read left to right, then top to bottom. And then following the business type activities, we have the component units, and it is cut off here. They have an LDFA in this example, starting with expenses, read left to right, and then top to bottom on this statement of activities. And actually, here's the bottom part of that statement that details the general revenues. Like I said, property taxes, state shared revenue, investment earnings, miscellaneous, and then transfers between the activity types, governmental activities, business type activities transferred out to the governmental activities, $34,000. And the results for the year, that change in net position is actually the third line from the bottom. You can see that governmental activities added 76,000, business type activities reduced their net position by about 73,000, and then the component units added 656,000 to their net position. All right, so government-wide financial statements, one thing that is important to note here that they're prepared once a year. The only time you see this level of reporting is in your audit. So you don't prepare your budgets at the government-wide level, you prepare your budgets at the fund level. So they are only prepared for the audited financial statements, but they are required by GAAP, or generally accepted accounting principles. And the Department of Treasury requires that local units of government follow GAAP. So you have to have these in there, but they're only prepared once a year, and usually with the assistance of your auditors. All right, then finally we have notes to the financial statements, and these follow the basic financial statements. The first note is typically a summary of significant accounting policies, and then we have compliance disclosures as well. So if you have budget variances, that's a pretty common compliance disclosure that we have. If you have unfavorable budget variances, we do have to disclose that in the notes of the financial statements. And then we get into the detailed notes, such as cash and investments, capital assets, long-term debt, et cetera. They each have their own note disclosure with more detail that supports the financial statements. Bill touched on required supplementary information, such as the management's discussion and analysis. This should be prepared by the client, but other, well, let me just touch on required supplementary information would include the MD&A, and we've got a few comments here on that, but it would also include budgetary comparison information. So that budgetary comparison information would be for your general fund always, and then your major special revenue funds would have to be included in the required supplementary information, as well as any pension and OPEB schedules that are required. The MD&A is intended to explain the financial statements and significant financial events in layman's terms. So it should be written for a non-financial statement reader to explain what happened in your municipality throughout the year. And we compare, or you compare, last year's financial statements to this year's financial statements. The MD&A is presented before the financial statements, so it's a little bit, again, I don't know if out of place is the right word, but we have the independent auditor's report, the MD&A, and then we go into the government-wide financial statements, fund level financial statements, and then the notes. Other RSI, other than the MD&A, required by GAAP, as I said, the budgetary comparison schedules are required for the general fund and major special revenue funds. You can show other, non-major, the budgetary reporting. The options for presentation there is to include it as required supplementary information or as a basic financial statement. That option is going away in probably about 5 years, and it will be required to be reported as RSI. You won't have the option to include it as a basic financial statement after the changes that are coming from the GASB. And then other, like I said, pension and OPEB schedules would be included as RSI as well. And this RSI would go after the notes to the financial statements. Some useful resources here, and Bill talked about this a little bit at the beginning too. The Department of Treasury has a number of useful links out on their webpage. Uniform chart of accounts that has been revised and is not yet required, but it's coming up quickly. They do have a budget manual out there for your use and reference, as well as an accounting procedures manual. The Department of Treasury will also issue numbered letters. This is periodic guidance. There is no set schedule. It just comes out when Treasury sends them out, but they're all numbered by year. So 2021, do we have any numbered letters yet? I don't think we have any numbered letters yet. And there's other information out there as well. The Michigan Committee on Governmental Accounting and Auditing has statements that they have out on Treasury's website. That's an advisory committee to the Department of Treasury. The GASB, so the GASB, the Governmental Accounting Standards Board, writes the rules, and all of the accounting standards or pronouncements are available free of charge at the link that you see there on the page, on the slide, as well as the implementation guides. There's a lot of useful guidance out there on the GASB website. The GFOA and the MGFOA, again, here's where they have some examples, sample policies, opportunities for educational. They have their own webinars and best practices and so forth. And again, a couple of really good websites for any resources or guidance that you may be looking for. All right, with that, that pretty much concludes our presentation. Our contact information for both Bill and I is on this slide. If you have any questions, concerns, comments, you want us to follow up with any of that accounting assistance, or any help that you need at all, please feel free to send us an email or give us a call. We're here to help. So thank you for your time and attention, and let us know. Thank you.